Welcome back, everyone, and good afternoon. You are watching Money Control live stream, and you are watching markets with Santo and CJ. Well, it looked like a mild start. We thought that we've probably, seen the worst of it, Santo. But clearly, that was supposed to, turned out to be a fake hit because clearly the sell-off has blown itself up. If you look at the Nifty and Sensex at this point of time, down around the day's low, with the Nifty somewhere around, minus 1.5%, and similarly Sensex over 1,000 points.
There's been some bit of a mild recovery, if at all you can call that, because the Nifty
yeah,
had gone below 17,300.
Yeah, I mean, if you look at it, we were down almost 340, but at this point of time, I think if I'm not wrong, we're somewhere around 360 levels on the Nifty, or 17,360 is where we are. The 70,300, of course, is the very important, support level. So we will have to wait and see whether we close the day above that level or not. But if you look at the major action today is happening in the forex market once again. The rupee plunged to a day's low, breached that 81 mark, which almost seemed possibly not likely not so long ago. But clearly today, earlier in the morning, we breached that mark. But since then, after hitting somewhere around the low of around 81.23, 81.20, we have seen a sharp recovery in the rupee as well, and that is largely down to what dealers are saying is possible intervention from the RBI. So the media reports that have come out, they also indicated that the RBI has intervened and has promised to not allow a runaway sell-off in the US dollar INR pair at this point of time. And Santo, the rupee market is very interesting because what is happening there has implications for what sort of participation you see from FIIs. Because if your investments are falling, plus the rupee is also weakening against the US dollar, that is a double whammy as far if you're an FII investor, isn't it?
Well, that's true. Just a slight qualifier to that statement. It's also that whenever foreign investors put money into India, they also factor in for a certain amount of depreciation, because that's always been the trend over the last many years. So to within a certain band, they're fine. It's only when the movement goes out of that band, that's when FIs really hit the panic buttons. But at this point in time, I think it looks like there is a fair bit of exit of hot money, which is amplifying the downtrend at this point in time. Still, that said, CJ, I would say it's a bit early to call for a trend reversal at this point in time.
I think if we have to look for a trend reversal, Santo, you clearly have to breach that 17,300 level, because if we breach that, then we're probably headed towards 16,918, 16,900 odd level, because that will be the next big support. But clearly today the volatility index has also seen a big move, almost more than 8% intraday move on the volatility index also, which clearly shows you that investors out there and traders out there are buying put options as if they were hot cake. If you look at premiums on put options as well for the Nifty, they have also surged quite dramatically. And this is, of course, ahead of what is expected to be another eventful week, Santo, because next week you would see a lot of action on policy as well as on the FNO side. So we will get to that later. But let's move on to some of the stocks that were buzzing in trade today, starting off with Santo.
Tata Steel, now the stock has managed to hold ground in a very weak market this morning, and the news which is holding the stock up is that the company plans to merge 7 of its group companies in the metal business into itself. Now, CJ, my only worry here is that even if it's slightly, it will lead to some bit of equity dilution, because you're issuing shares to the shareholders of all the other companies. That is one. Plus, these kind of complex mergers, they also take management bandwidth.
Yes.
Cultural issues won't be so much of an issue in this case, because it's within the same group. So there shouldn't be so much disparity between HR policies and all that. But that said, it will still lead to some bit of churn when there is definitely, to some extent, there is this integration issue which will come into play again. And that said, the outlook for steel prices is now slightly improved of late, but this also has to be seen in the context of the overall weakness in the global economy at this point in time, which could clearly impact demand. And China is not in a much better shape at this point in time. And far from being a consumer, probably you could see more of steel imports coming out of that country at this point, steel exports rather from China, which in addition could lead to a glut in the global market.
Well, Santo, you have rebutted to my arguments even before I made them. Well, talking from shareholders of the companies that have been merged into or will be merged into Tata Steel, I think for them, I think this could turn out to be a good thing overall, because If you look at, you are getting shares in an industry leader like Tata Steel. Of course, there will be synergy benefits, efficiency benefits, cost benefits that will anyway will be there. So I think overall it may turn out to be a good thing in the long term for the investors of the other 5 companies that are being merged into Tata Steel. Overall, if you look at it from a fundamental perspective for Tata Steel Santo, the demand and pricing environment is expected to improve going ahead in October. We already know that prices have fallen more than 20-25% in the domestic market. So clearly, not industry people are not really expecting more downside from here. And then they are expecting that once demand comes in from the domestic side, at least you will see some improvement in prices. Of course, the major overhang at this point of time is that export duty that has been imposed by the government. If that is taken away, then probably you could see some upside on steel prices going ahead. Yes, China will play a crucial role. That remains to be seen. China has laid out plans for infrastructure spending going ahead because it wants to boost the economy at this point of time after COVID shock earlier this year. And if that plays out, Sando, to the script, then export demand clearly could be offset by what people have been talking about, the weakness in Europe and US. That could be offset by the demand that could come in from China. And at home, I think if you look at it from a longer term perspective, Santo, with the entire conversation around capex recovery, if that is truly well and truly underway, then clearly a metal company or a steel leader like Tata Steel will ultimately benefit from any sort of uptick we see in the construction sector going ahead. So for me, I think this remains probably not a tactical bet at this point of time, but from a longer term perspective, if you're looking at it from a portfolio perspective, this could be one stock to watch out for.
Well, but the management has also guided for some kind of pressure on margins, although it has said that volumes could be much better. So
Yes.
even if the volumes do go up and the top line does improve, profitability still would be an
I
issue.
think September quarter you will see pressure on margin. I think there's no doubt about that in the September quarter you will definitely see. But I think that sequentially speaking, December quarter and March quarter could be much better than what we will see in the September quarter. Well, the next stock on first stock on my radar today is Paytm from the newest tech space. It actually was one of the outperformers in the market earlier in the day, and that is largely down to the fact that Goldman Sachs, brokerage from Goldman Sachs, has added the stock to its high conviction buy list at this point of time. They believe that this is the most attractive and most compelling growth story as far as the India internet companies are concerned, Santo, and because of the drastic reduction in valuations that we have seen since the IPO that happened almost a year ago, clearly makes this story a very compelling buy according to Goldman Sachs. Now, what is the argument that GS is giving? They are saying that they expect at least 50% revenue growth on a year-on-year basis in the coming quarters for the company, as well as improvement in margins also, because a lot of the high margin segments or the businesses that Paytm is in at this point of time, their contribution to the revenue will continue to increase going ahead. So that is on the fundamental side, Santo. And overall, you know, the only overhang or the only point of caution could be that a lot of the pre-IPO investors, their lock-in period will end come November. I think on November 18 is when the 1-year lock-in period ends. Now, we are seeing in the case of Zomato, we have seen in the case of some of the other new age tech companies that pre-IPO investors had utilized that opportunity to book some profits, you know, in the shares that they are holding. So if that does happen and you do see a sell-off, one can expect that that could be a bargain buying opportunity on this counter according to Goldman Sachs. Remember Zomato, which had seen a massive sell-off, it fell from about 60 odd level to almost 40 odd level because when the lock-in period ended, has now recovered all of those losses. So clearly there is precedent that investors look at these sort of opportunities to bargain hunt, and I think that is why Goldman is very, very positive on the stock.
We had the same argument last week also, CJ, and I still maintain the same. If you look at the price performance for a while now, the stock is well off the August highs. It had rallied smartly at that point in time, and since then it has come off quite a bit.
I think, Santo, but that is also down to the jump in US yields that we have seen so far.
Well, yes, I know that, but it's a very tenuous relation actually there between yields and the performance of tech stocks. In fact, some of the analysts have also pointed that out. Everything finally boils down to valuations, and that is where I think the market is not deriving much comfort. Rather, the company has made a series of announcements, set timelines for profitability, and now the market seems to be saying, okay, we'll wait for that first, especially in such an uncertain environment. I doubt if investors would be really wanting to go after stories where earnings visibility is limited, and that more than anything else, CJ, is what I think could hinder the outperformance of Paytm.
Yeah, I think, Santo, the initial signs at least are good so far. So we will have to wait and see whether the September quarter earnings just build on the momentum that we have been seeing in the March quarter and June quarter for the company.
Well, next stock, Hindalco, the stock too has been underperforming for a while now. Overall sentiment for metal
It's
stocks
been a bad
is
year
not,
for Hindalco.
for almost metal stocks.
Yeah.
They've fallen quite sharply from the highs you had seen in March. But in the case of Hindalco, it is not so much the domestic business, but more it is the performance of Novelis that investors appear to be betting on. Novelis had a blowout June quarter and encouraging it to increase guidance for the rest of the year. And many analysts feel that this is something that would work well in favor of Hindalco. There was some concerns about the company's ambitious capex plans, which came as a surprise to most analysts, but somehow the company has managed to assuage investors on that front, and you're seeing some bit of recovery also in the stock. It had come up very sharply. Since then it has trimmed some of those losses, although it's still off its highs, but this is a company clearly to keep an eye out for.
But Santo, yes, Novelis' commentary, especially on the demand side, was quite encouraging after the first quarter earnings. But I think a lot has changed in the world since the time those earnings came out, and although it's not been more than 2 months, it still has been a long time enough for market to change their outlook on a company like Hindalco. For me, I think Novelis' profitability would be something that will be under scanner when the September quarter earnings come out, largely because there are concerns about US recession. Novelis had guided about or had posted about $585 per ton of EBITDA. Clearly, that will not be able, they will not be able to sustain that going ahead, and that is a view that even JP Morgan also has. And I think one thing that needs to be looked at is that one of the peer companies of Novelis in the US, Arconic, had come out with its earnings recently, and they had cut their guidance for 2022 quite substantially, both on the EBITDA front as well as on the revenue front. Although JP Morgan believes that there is not much to read for Novelis, but I think it's
more of company specific.
It is true. There are a lot of company specific issues, but I think largely if you look at it, given the recession fears in the US, the demand slowdown fears in the US, I believe that investors should be a little cautious as far as the Novelis growth story is concerned. As far as the India volumes are concerned, I think that largely hinges on the revival that we are seeing in the auto sector, and I have said on the show before that I am still a little doubtful as to whether that revival in wholesale volumes that we have been seeing over the past couple of months, whether that will sustain beyond the festive season. So I think there is a lot of caution at this point of time on the counter, and that is there for the right reasons. But the next stock, Santo, on my radar today is from the housing finance space, and from a lender that does not get chatted up that much in the market, and this is Aptus Value Housing Finance. The stock has risen almost 23% in the past 3 months on the back of what has been a very, very strong AUM growth as well as loan growth trajectory for the company. Citi Group had recently initiated coverage on the stock with a buy rating, and they believe that the AUM of the company could easily compound at a rate of about 29% over the next 2 to 3 years. They believe that their risk assessment capability really makes them a standout performer in the housing finance space. Along with that, if you look at the asset quality, despite the COVID shock, the asset quality and the credit cost of the company has not really deteriorated materially for Aptus Value, and that is where I think Citigroup believes there is a lot of merit in providing premium valuations to Aptus Value Housing. Apart from that, if you look at the price target, Citigroup is expecting about 43% upside over the next 12 months, and they feel that it could match the sort of outperformance that even Aavas Financiers has given in the affordable housing space so far.
Well, very little to argue against the stock at this point in time. The performance has not been spectacular, but definitely it has been consistent. And the segment that it's catering to, which is the affordable housing, that is where most of the growth is happening, and that seems to be less prone to the overall downturns in the economy. And the stock has had a decent performance since the time it got listed sometime last November.
Yeah.
So no major arguments against that one, CJ.
Well, Santo, that's the new.
Cipla is the last stock on our watch list this afternoon. Now, the immediate trigger for the stock has been the closure of the inspection report at its Indore plant, and that has definitely lifted sentiment for the stock. Overall, the first quarter numbers had also kind of led market to take a slightly more positive view, but because of the fact that the pharma sector in general has been out of favor with the market and everyone's attention has been more on growth stocks, Cipla too has suffered, but brokerages tracking the stock feel that the pricing pressure in US, which is the main concern for almost most leading pharma companies, that should be neutralized somewhat by the fact that Cipla has got some high value launches lined up, and its respiratory products are also doing pretty well at this point in time. This is certainly a stock which CJ, I think, can manage to weather the storm in the market.
Well, Santo, I think within the pharma pack, Cipla has been the one that has been really getting a lot of traction for investors. But one of the arguments that is given in favor of Cipla, you know, if you look at it, is that it has a larger domestic focus, and therefore at this point of time when you have a lot of pricing erosion happening in the US market, it is better to bet on companies which are more India focused at this point of time. But if you look at the India market growth, Santo, over the past year or so, and even in the past half an year, it has not been as impressive as the hype has been made around it. IPM is growing at not more than 7 to 10% at this point of time, which for a country like India and an under-penetrated market like India seems a little low at this point of time from my point of view. Apart from that, yes, the US portfolio, I think, Santo, the existing drugs that are already there from the company, they will face price erosion going ahead. We will have to wait and see whether the new product launches will be able to fully offset them or partially offset them, because if they are only able to partially offset them, then of course you will see a lot of pressure on the margins of Cipla going ahead. And apart from that, another factor that you have to keep in mind while looking at Cipla's margins is the fact that marketing costs have come back for a lot of pharmaceutical companies. In 2020 and 2021, they enjoyed a lot of benefit because lockdowns were not there, so sales reps were not going out on tours that they usually do, and promotional costs were also quite low. But all of those sort of expenses have come back from the fourth quarter onwards, and you saw that cost having an impact in the fourth quarter margins as well. So I think going ahead, that is this one component of the cost side is worth looking at, and how that will impact the margins of a company like Cipla going ahead.
Well, and with that, a quick look at the market. Sensex is down now almost
1.7%, almost more than 300 points.
And the Nifty is down close to 300 points, and almost at this point seems to be in danger of slipping below the 17,300 mark. With CJ,
I think, Santo, the selling has clearly intensified after 3 p.m. and generally market people usually tend to wait till 3 p.m. to see if volumes do see a spike, and clearly we are seeing an intensification of the selling that we were seeing. And if you look at the broader market, Santo, the cuts there are even massive. The Nifty small cap index down about 2%, the Nifty mid cap down about 2.3% at this point of time. And if you look at the India VIX, now that is almost at 10% levels, easily breaching the 20.5 points level. And on sectoral indices, the Nifty Pharma, that was the sole soldier for the bulls earlier in the day, even that has now turned into the red. So all the sectoral indices on the NSE are in the red, with the Nifty Bank being the top loser, among the top losers. If you look at it, down almost 2.6%, with all the 12 constituents in the red territory.
Well, and what do we keep an eye out for in the week ahead?
Well, Santo, first off, immediately on later today, you have the US Fed chief Jerome Powell speaking, so that his speech will be very widely tracked, and people will be looking for any sort of moderation, if at all, in the sort of commentary, given the market reaction, whether there is any sort of moderation in Powell's speech. I think that will be something to look out for. But next week, of course, the focus will turn home to the Reserve Bank of India, because the Monetary Policy Committee will be meeting from Wednesday till Friday, with the outcome of the policy statement coming on Friday morning at 10 o'clock. Apart from that, of course, volatility will also be high, because you have the FNO expiry, the monthly FNO expiry of the September derivative series happening on Thursday. So looks like a very eventful week, Santo, next week.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Hope you have a nice weekend, and till then, it's goodbye from us.